On this week's episode of the Crushing Debt Podcast, why paying off debt won't make you wealthy. So, welcome back to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner, owner and founder of Yesner Law. I'm joined remote today. We are all remote today, but I am joined by your financial coach, George Corbello. How you doing, George?
I'm doing well. It's close to 4th of July, so the celebration, 250, everything is all, fireworks. But be careful. I think there's a fire restriction here in Florida, so we get a little drought season. So be careful, having fun out there. But doing well, my friend. Well into the summer. It's hot here in Tampa, in
Yeah,
Florida, I gotta say. But doing good, man. How you guys doing?
good. So, interesting little legal fact. My HOA has a restriction against setting off fireworks. We're not allowed to
Okay.
set off any kind of fireworks that make a lot of noise, that explode, that shoot. So most of the good stuff we can't use here in our HOA. Florida passed a law recently that on I think maybe 2 years ago, as we're recording this,
Yeah.
um, that basically says associations, condos and homeowner associations cannot restrict setting off fireworks during certain holidays un-
Really?
unless
Unless.
the restriction existed prior to the law.
Yeah. Okay. So you
So,
guys grandfathered in.
right, so we can still restrict people. Now, I'm not one of those HOA neighbors that's going to turn in my, not that, if someone's violating the rules of the association, then they
Yeah.
should comply, but if somebody's setting off fireworks, then so be it. But
Yeah. Nah.
I think we're gonna do the normal hamburgers and hot dogs and grilling and cooking out and whatnot. What are your Fourth of July plans?
I think we're gonna do the same. Because the Yesner family didn't invite us over, so I'm gonna assume that that's one thing that gotta make fun of him always. But no, I think, dude, I'm gonna probably head to the pool, do something like that, and do some grilling. That's come on, tradition, baby. That's all we got.
I got as soon as we're done recording, about an hour after we're done recording, I got the contractor coming over to my house to start the permitting process for my new outdoor back
Nice,
patio. So
very nice, very
so
nice.
so, so your invitation is in the mail.
It's in the email spam. Gotcha.
It's in the email spam. But this is not a show about saving money on Fourth of July. What I would do is refer everybody back to last week's episode about the
Absolutely.
cost of the cost of ER visits when those fireworks go off in your hands. Instead, we have a guest on this week's episode. So, for 11 years, he's helped entrepreneurs and high income professionals build financial systems that reduce cash leakage, resolve IRS debt, and create real alternatives before bankruptcy ever becomes their only option. He works with business owners across the US who are profitable on paper but structurally exposed. And that's a story that a lot of that I know well, a lot of my clients know well. The community he's built around his work includes 27,000 plus entrepreneurs on Facebook, more than 100 five-star Google reviews from clients who've been exactly where a lot of our listeners are, even maybe listening to this episode today. Welcome to the show, Rachid Barry. Welcome, Rachid.
Oh, thank you, thank you, thank you, Sean. It's a pleasure to be here with you today.
Yeah, so I,
Yeah, hey, George, how are you?
Always, always. This is great. I love interviews. These are great.
so I
Right.
want to give out real quick for anyone who wants to contact you. Your email address is rbarry. Barry is B as in boy, ARRY. So it's rbarry at rmjconsultant.us. And again, I'll put that in the notes, but anybody that wants to contact you is rbarry at rmjconsultant.us. So, why don't we kind of just start at the very beginning? I mean, I like that first question that you posed, which is why paying off debt won't make you wealthy. So, why do you think paying off debt won't make you wealthy?
Well, exactly. Thank you, Sean, for this question because, in my understanding, paying debt is just like it just means that you owe less money, but it doesn't make you wealthy.
Right.
Yeah, yeah. You paying off your debt is good. It's you don't have no more liability, which is really great. But building wealth is not about what you earn and what you pay off, but it's what you keep. What stays after? We all sometimes we just pursue income. We want to make more money, want to keep making more money, more income. But what stays after? What do you keep after? That is where you start building wealth. So in my understanding, when I work with my clients, it's some of them they concentrate on I want to make more money, or I want to grow my wealth, or I want to make more money, I want to grow my company, I want to make more revenue. But
Hmm.
now, what stays after you pay all of your expenses, and what do you do with that money? What do? You invest. This is when you start actually building wealth. So in my understanding, paying debt is good. It's just being you don't have liability, but you gotta keep more of what you earn.
It's a
Well,
good
and I
mindset.
think,
Oh, go ahead,
go
man.
ahead. I was going to say, I think that the two also kind of go a little bit hand in hand. For example, I'm actually getting close to paying off my student loans. I think my student loans will be paid off sometime in October, November of this year. But
Nice.
then instead of instead of saying, "Yay, my student loans are paid off," I am used to spending that money every month. So I could take that money and I could either divert it to another debt and pay down that debt faster, or I could take that money and invest it every month. I'm already used to it going out. So I might as well just keep it and send it to a financial advisor to invest or put it in some other kind of vehicle, Roth IRA, whatever. So I agree with you. I understand what you're saying. Um, and I think that paying off debt allows you to then divert those assets so that you can start to build the wealth.
Absolutely. I mean, it comes down to discipline after paying off debt. If you, as you explained it, I agree with that side also. If you're disciplined, you're paying off the debt, is you finish it, and the extra income that you were using actually to pay off the debt, if you can divert that to some type of investment vehicle, then yes, you start building wealth for you. But it doesn't happen all the time because people are not disciplined.
Right. It's a mindset. The one thing that I love the mindset you're trying to kind of portray, right? Kind of like getting out of debt is not going to build you wealth. It's kind of your stepping stone, right? Because a lot of people that I've seen, again, even with a lot of the clients that I work with as well, once they get out of that debt mode, right? There has to be a discipline to transition into building wealth. You have to start saving it, right? Getting into that practice. So a lot of people, we've been struggling for so long to handle the debt and manage the debt and do those kind of things that we forget that actually there is exercises and thinking way of thinking to actually start building it. And I think that's a struggle for some people because, all we've been doing is hustling. That's all we've been doing for the past, whatever, 20 years, that kind of thing.
Yeah, absolutely agree. And then there is another side of it also. Instead of maybe start paying off the debt, if you can be disciplined and take that money and find some investment vehicle that produce more ROI instead of paying off the debt, you can do those type of investment. Then with the ROI, you can start paying off debt. Depending on what is the interest rate on the debt and also what do you get on the ROI when you invest the money.
What's your strategy then when it comes to like when like somebody comes to you, right? And we're, like, hey, where do I get started? What are some of the things you want your clients to kind of emphasize when it comes to, getting started? Because that's always the harder part, right? It's that
Yeah.
getting started, kind of like where should I? And there's tons of advice. So, I want you to kind of like you're working with your clients. What is the first thing you want them to focus on?
Yeah. So the first thing that when I work with my client is just focusing what stays after.
Stays after.
What
Okay.
stays after? It's always my question. What stays after? Because if I work with a client making 6 figure or 7 figure, income, you're making 300 or $400,000. So, okay, all right, that's good. So you're making 400,000. What's your tax bill? Is it, what's your effective tax rate? Are you at a
Hmm.
20, 30%? So then when I look at it, I'm like, okay, so maybe you're making 400, you're in a 30% tax bracket. So technically, you're losing about 90K in taxes. How do we build strategies so you can keep more on those taxes that you've been paying to Uncle Sam? That's where I
Right.
start. Because if I'm able to bring legal strategies that are actually in the internal revenue code that makes you that you can keep more of that, then you can divert that type of saving. now to investment vehicle and start building wealth off that. If I can help you save 50,000 out of your $90,000 tax bill, that's a lot of money for you. You
That's a
just
lot.
got a $50,000 extra. That is more than 10% increase on your salary, actually. So now you, by working smarter, you got a raise. And now if you discipline to take that raise and put it to some investment vehicle, this is when you start building wealth. So my go-to is tax strategy. I build tax strategy for high income earners and business owners. And my thing is, it's always about what strategies can be used, depending, even though you're a W-2 earner. W-2 doesn't mean that you are stuck.
Yeah.
Now you don't have to be a business owner to do tax strategy, because this is one of the expensive myths that a lot of people that have salaries feel like, oh, I don't know what kind of strategy because I don't have a business. No, there's legal strategies, legal frameworks that you can use. Once we use those type of things, then you can save that money and then you can divert it to some type of investment vehicle.
Well, and just to make sure, in your introduction, I didn't say it, but you've got a lot of letters after your name. So you're an MBA, you're an MBA, you're an EA, which is an enrolled agent. So you are qualified to speak to IRS strategies and tax strategies and that type of stuff. You're eligible to represent people in front of the IRS. You're also CTC. What is a CTC?
Yeah, CTC is certified tax coach.
Okay.
Yeah,
And then
meaning like I deploy tax strategies for high income earners.
Okay.
Mhm.
And then CTRS, what is that?
Yeah, that is certified tax resolution specialist.
Okay.
So
So
meaning
tax
like if anybody has some issues, you have some IRS, problems, and then we can go to the IRS, represent you, bring some strategies, and find a way to have a deal with the IRS.
Okay. And then the last one is CB.
I certified bookkeeper.
Okay.
Yeah.
So you've got a little bit
You
of
got a
a
lot of angles.
yeah, you got
I
a
know.
little bit
Yeah.
of
I mean, it's all
accounting.
just come down to the same, tax and accounting, wall.
Mhm.
Because I feel like if I'm helping a client, is because I do have clients that come with me on different angle. If you come to me that you have a bill with the IRS,
Yeah.
you owe them, $100,000, and then you're trying to find a way, then we help you solve that problem. And sometimes it doesn't end up by you paying that $100,000. There's legal framework that we can do an OIC with with the IRS, offer in compromise, maybe saving you 80 or 70% of that tax bill legally. And then from there, I look at it also, what caused you to owe that type of money to the IRS? Then we build tax strategies for you not to fall back in there also. So this is where that the strategies comes in place, where we start deploying those type of strategies, work with you, coach you, and show you the legal frameworks and what do you need to do proactively so that your tax bill doesn't surprise you when you go to file your tax return.
And you're located in Houston, Texas, right?
That's correct. Yep,
But
Houston, Texas.
but you've got clients all over the country?
Oh yes, all over the country, all over the 50 states.
Okay. Okay. So let's talk. We talked a little bit the pre-interview when we talked the tax trap. So this is something that a lot of my clients don't realize because I do some debt settlement where a client will come to me and maybe they're not eligible for a bankruptcy, but they've got maybe a lump sum of money or they've got the ability to make payments on a debt. And so let's say I have a client with a $50,000 debt and I'm able to settle it for, let's say, 30% of what's owed. So I'm able to settle it for $15,000. So I save the client $35,000. What does the IRS say when they get that $35,000 savings in terms of not paying the debt?
Uncle Sam will tell you we need some of that money. They'll tell you that because if you help clients, and you save them $35,000, right? So they're gonna get a 1099-C of debt cancellation from the IRS saying that you actually earned that money. That was income to you. So out of that income, depending on your tax bracket, then you're gonna have a tax liability. So if you imagine that you just said it with this example, $35,000 saved, the client is at maybe 25% tax bracket. 25% of 35,000, just looking at what, maybe somewhere around about around 9,500 of taxes. So then this is where, you still save them, but they still have that $9,500 they have to give to the IRS. Now there's ways of how to work this around. It's either, there's always two ways that I go when I have clients that have 1099-C, depending on what is your current asset and what is your current liabilities. Depending on when the debt got discharged, if your liabilities were over your asset, then potentially you might not have to pay that tax bill. But if that is over, then this is where we have to do some tax strategies. We have to bring tax strategies. And those tax strategies are, it's different angles that we tackle this. Depending if you're a business owner, depending if you are a W-2 salary, there's what I call the low-hanging fruits for tax, for business owners. We bring some low-hanging fruits in there, make sure that, you used on those low-hanging fruit, then we'll go to the advanced tax strategies, because the goal is to make sure that you pay your fair share of taxes, but not a penny more.
Okay. Let me ask this, because again, we talk about tax strategies. There's, options from there, right? Most Americans today, right? We got Americans, someone who's carrying credit card debt, right? That has 20 to 30% interest. That's kind of what we're working with at this point. You mentioned, W-2, any of the small business owners, but what tax strategies can, could create extra cash flow when it comes to attacking that debt? Because right now, most people are going to just think about, like, I have this debt and it's high interest debt. And you're saying, like, hey, focusing on debt is one thing, but there may be some tax strategies without giving away the the goods, right? Like, what would be some of the things you want to have someone think about when it comes to and maybe possibly working with you?
Yeah, so I'll attack this thing on two angles. First, if I take someone that was, let's say you are a W-2 earner, this is typically W-2 earner making six-figure income, making 300, 400,000 somewhere, maybe
Yeah.
250. So then you usually go to your tax preparer. They prepare your tax return, and then you do all those normal deductions and things of that nature. So strategies that we bring in there is called investment strategies that we typically bring. Investment strategies can be investing into a real estate, with the STR, short-term rental. When we do those things, we can do cost segregation on those investment that you do. This is one. So that's one strategy. Second strategy is another strategy a lot of people don't know about it. We call that the box house strategy, which is mobile homes that where you can do investment and then you can get a depreciation out of that, and that depreciation is not recaptured. So then when you do those, when we do those strategies, let me just give clear numbers so we can work with that.
Right.
Oh yeah, clear numbers. You make 300,000, 30% tax bracket. You're paying $90,000 to the IRS, right? $90,000. Instead of sending that $90,000 to the IRS, we take maybe $70,000 out of that, and we do a box out strategy. Out of this box out strategy, so 70,000, we get a $350,000 depreciation. And when we get that $350,000 depreciation, it comes down and knocks all of your income to zero, because it's a math problem we gotta solve, right? So when we solve that math problem, now instead of you sending 90,000 to the IRS, you only use $70,000 to do the strategy, right? Now you ended up with, you still have $20,000 left over. That 20,000 can be now redirected to the high credit card debts that you have at 20%. You can start paying those debt down if you want to do that. That's one strategy. And at the same time, that $70,000 is going to earn you between 6 to 10% ROI for the next 8 years, ending up with you having about maybe $48,000 for the next 8 years. So you see, with that strategy, now you're saving $20,000 in your tax return. You have $48,000 coming to you for the next 8 years. You see how powerful is that strategy? Instead, if you don't do it, then yes, you're still going to keep sending that $90,000 to the IRS. But with that strategy, we just saved you what? Close to $50,000 that you can use. If you guys strategies, paying off debt, paying off those credit cards down, and then you still have investment that is actually building wealth for you because you have ROI coming in. So that is for just a W-2 earner. That's just one strategy. We have more. I have more strategies that I can use. DNA Harmony, or there's so many strategies that we can use when it comes to W-2 earner. You don't have to create a business. You don't have to be a business owner. That's one side. But when we go to a business owner, let's say you are a business owner, and then you depending on your entity structure, you have an LLC. Sometimes we have to move you to an S corp. I start calling those the low hanging fruit. We move you to an S corp. You stay 15.3% on self-employment taxes. That's one. That's good. Then we move you to some of the strategies, maybe the Augusta rule. I've worked with business owners. I've never heard about that rule. What is that? Like, as a business owner, you can rent your own house to yourself for the next 14 days out of the year. That income is tax free to you. So anyway, if you rent your house to yourself at $20,000 for the 14 days, 20,000, right? 30% on tax bracket, you just save $7,000. That's a lot of money that can be redirected to maybe marketing, maybe payroll or something like that.
Right.
What about hiring your kids? Hiring your kids is a good strategy. You have 1 or 2 kids that you can put on payroll. Then you pay them up to the standard deduction, which is about $16,000. Right. 16,000 if you have 2 kids, that's 32,000. At a 30% tax bracket, you just save about $10,000 in your tax bill. So those are, and then accelerated depreciation when we use the vehicle and things of that nature. But those are what I call the low hanging fruit. A lot of people will see those things on social media, that's good. But when we can step into the advanced strategies where actually now maybe I'm working with a client that is making $700,000, $800,000, or $1 million or $2 million. So I have those type of clients. So when we get to those type of level, now then we bring the advanced strategies. It's like where we talk about retirement planning, Roth IRA conversion, or we talk about, I did talk about box house, we talk about DNA harmony, we talk about solar tax equity. So the tax equity, government created incentive to actually, if you invest into renewable energy, you get a tax break. Some business owners don't know those things. And we've got powerful about those strategies. Sometimes we go 2-3 years back and we help you actually recoup some of the money that you pay in taxes with those type of strategies.
Right.
Yeah. And then sometimes we do those solar tax equity with W-2 earners, and we are able, or maybe a convertible tax bond. That's another strategy. Convertible tax bond. Whatever taxes that you paid for the past 2-3 years, we can go back in there and recoup you 30% of that. Imagine if you paid $100,000 last year in taxes. We're able to get you $30,000 back to your pocket legally. All of those strategies are legal. It's exactly follow the Internal Revenue Code. 30%, $30,000 out of $100,000. What will you do with that? Pay off those credit cards that are 20 to 30% interest.
Yeah. One of the low-hanging fruit strategies that I like, and I talked to somebody about this the other day. What I've always done is looked at my refund. A lot of, and this is, George, a mindset issue as well.
Yeah.
A lot of people look at it and they say, great, it's tax time. I'm going to get a big refund. Where I look at that and I say, why did I give the government an interest-free loan for the entire year? So just to make the math easy, if I were getting like a $6,000 refund annually every year, what I might do is say, well, I'm going to adjust my withholdings so that I withhold, let's say, let's say $250 less every paycheck. So theoretically, now my refund goes from 6,000 down to 3,000.
Correct.
But my weekly take home goes up by $250. So I've created more cash flow. I've gotten that refund back in my paycheck over the course of the year that I can then use to maybe offset one of those credit cards that I have to pay off, because now I'm getting more cash flow in my paycheck every week. That's one of my favorite tax saving strategies. But I always tell the client, get with an enrolled agent, get with a CPA, get with a tax attorney, because what you don't want to do is say, great, I'm getting a $6,000 refund every year, so I'm going to reduce my withholding by $1,000, and now I'm going to owe a $6,000 because I didn't withhold enough. So
too much.
Right. So you really want to be careful with that. But that's one of my favorite tax strategies.
Yeah. Sean, I love that you actually brought that strategy, because this is one of the powerful strategies also that I talk to some of my clients. I'm like, okay, well, out of your withholding that you're sending to the government, you're not getting no interest on it. But what about if we reduce that withholding And you got two ways. And actually, I usually teach one way, but with you guys, I'm just learning that there's two ways. Wait, number one is actually you can put that money in a CD account,
Right.
Earning you 4 or 5% interest. Imagine if we are able to help you move $500 or $1,000 every paycheck, or depending on how much money you're making, and then you get 4 or 5% of that money. So at the end of the year, you are earning something, or maybe you redirect that as in credit cards bills, and that is actually saving you because now you paying down those debts. So then technically, paying a lot of interest on those debts also. But so when I work with my clients, I usually tell them that, hey, this is where it's important to plan, because we got to plan. So when we plan, your taxes is not a surprise for you. We know exactly what's going to happen when you go and file your tax return. So I tell my client, hey, you know what? You can go ahead and reduce those without it at the moment now, because we got tax strategies working for you. So take that money, put it into investment, make that money, let those dollars be soldiers and work for you. Those dollars need to go out there and bring you more dollars instead of just sending it somewhere that is not going to bring you anything back. So this is what is important. And I tell clients is like, tax strategy, it's different than tax preparation. It's like you're sitting in the car, you're looking at the review mirror. That's historic. That is what tax preparation is. January, there's nothing we can do to help you. It's already passed. You got a plan. When you plan, you know exactly what's going to happen. If you know, then use this type of saving, and then you do that strategy that Sean just said.
We talked about like small business, high income. The other thing that comes, but these are strategies that you can use if you're making 50, 70, 90, 100,000 from that. Because, it's funny, we talk about middle class, right? And we're thinking like, 90, 75, 90, but middle class today is 120, because of inflation, just the way we are. But the strategies are still consistent, right? You can still have the same things that you can put in place and still be able to, again, put you in a position where you not only are, I'm going to assume you can pay debts down, you can invest more, you can save more. Again, how much more money can you have, stay with you rather than it going out to do something else? So I think that's the one thing we want to also emphasize. It's not just, high income, obviously the more money you work with, the more you can play with. I get that. But it is something that we want to make sure we emphasize, like, hey, look, it works at every different level of salary. So it's just something to keep in mind.
Oh yeah, absolutely, George. I 100% agree with you. It's like sometimes I get this question that, I know when I take examples, I talk about, 200, 300 or 400, but I get asked question, when do you have to start planning taxes? Like as soon as you're profitable in your business. It doesn't have to be that. As soon as you start being profitable in your business, yeah, you need to start planning. Even though you're saving $2,000 in your taxes or 3,000, put that into, that can be the money that you put every year for your kids' college education. That is how you're building wealth. So it doesn't have to be a lot. Even $2,000-3,000 you're saving, it's still something. It's a lot.
Right. Well, let me ask one more, Sean. I'm on a roll here. So there's been a lot of tax changes, right? A lot of laws changes in the law and how it's doing. Obviously, 2026 or 2025, 2026 has been an interesting season. Are there any recent tax changes or changes that are coming that you want your clients, families, that they should be paying attention to when it comes to, getting ready for, next year's taxes?
Oh yeah, there's a lot of changes that happen, especially with the big beautiful bill that actually came out. Those changes actually started, in effect this year. When we talk about the Trump account, Trump account that actually got created, and it's actually, funding something, is giving them for new babies that were born in 2025 or 2026. That is actually changes that families. I mean, it's $1,000 like they can put in your bank account, which is good, as a retirement planning for the kid. That's one strategy. Another strategy is actually the car, the interest write-off on the new cars, which is good. If you did, purchase a new car, make sure that your tax preparer actually going to write off those interests, because it's, you're saving something. So that's another thing. And then the big change that actually we do talk a lot about with our clients is the with the renewable energy side, I talk about a strategy right now, which is the solar tax equity strategy. It's going to expire very soon. So, and I encourage families and, that especially that paid a lot of money in taxes, that get with your tax preparer or get with your tax strategist and talk about those type of things. If you did have a large tax bill in the past 2 years, that there's still legal ways of, actually recouping some of those incentives on the renewable energy side, because the new administration actually going to pause them. This topic in about 2028 is no longer going to be viable. So it's better that you take advantage of those changes that are coming up. It's each dollar that you can save is always something that will help you build wealth.
So before we kind of get to the end, I did want to mention also, so your email address is also the website, which is rmjconsultant.us. And there's a whole bunch of information on the website. I'm looking at the blog articles right now. There's a really good blog article. Now it says top tax mistakes small businesses make in Texas and how to avoid them. I assume that a lot of those tips would apply whether the company is in Texas or not in Texas. But it's good stuff. Failing to separate personal and business financing,
Yeah,
ignoring
big time.
payroll and employment tax requirements, misunderstanding deductions, failing to plan for estimated taxes. That's a big one. We're coming up on the 2 year anniversary since my father passed away. My mom got a refund in 2025, or I'm sorry, 2024, but had to pay taxes for 2025. And when she went to the CPA and said, "Why did I get a refund last year and I have to pay a refund this year?" Well, it was because my dad was paying in quarterly taxes. And so
Oh,
when he died and she didn't know she had to do that, now she had a tax bill
that's
at the end of the year.
Oops. Yeah.
Yeah. Overlooking state specific tax obligations, inadequate record keeping, delaying professional assistance, failing to optimize tax strategy. So there's a lot of good information on the website and the blog. Again, it's rmjconsultant.us. But anything we didn't talk about, anything else you wanted to add?
Oh, no, I believe we did cover a lot for especially I feel like if we're able to bring value to people, it's always about just
Right.
bringing value, bringing information that is actually crucial, that that it's really important that you start thinking about how you plan about your taxes. Because, and I tell people that families that your number one biggest expense is not your mortgage. It's not your, debt or car income or car loan payment or anything. It's taxes. Because yeah,
That's
it's
true.
taxes. That's your number one
I thought it was
biggest
my
expense.
kids, but I got you on the taxes too.
It's
The
taxes. I
kids is
mean, if
close
you're
second.
yeah, if you're on a 30% tax bracket, imagine that means that out of the year you work 3 months just to pay taxes.
That's great. Yeah.
Yeah, so
Yeah.
you wake up.
That's why that one I'm going to bury my head in the sand because that hurts every time I hear that. But yes,
Yeah,
it is
yeah, but
probably very true. Correct.
so when I think of it, it's like you wake up for 3 months out of the year, go from 9 to 5, just work to pay taxes.
That hurts.
That hurts,
That hurts.
but there is, I know it hurts, but there's ways to relieve. Ways to
To
relieve is
relieve it.
actually, planning, actually doing tax strategy instead of just calling your tax preparer and just go ahead and file your taxes. That's the wrong way of doing taxes.
Right. Right.
When I meet with the clients, I'm like, I always have two questions. What is your current income? And how many times do you talk to your accountant or CPA or EA? If you tell me you only talk, oh, maybe once or twice, I know you have a problem.
Yeah.
I know you have a problem because if you're not having, because you got to build a relationship with your accountant. This is someone that we need to talk at least once every 2 months. That's the minimum. So when we work
Mm,
with our client, this is what we tell them. And also, having a refund doesn't mean that you don't pay taxes. That's one of the biggest mistakes some people do.
right.
You know, you make $250,000, you go and file your tax return, you get $3,000 or $4,000. Oh, I got a refund this year. I didn't pay taxes. Wrong. That's not true.
That's true. Right.
You overpaid actually on your withholding. And
Right.
then the government gave you back something, but it doesn't mean that you did not pay. You did pay.
Right.
So, when I bring those strategies, when I bring those advices, like I'm an enroll agent, so I'm in the best interest of my client and best interest of the government, also making sure that we are not doing tax evasion, we are doing tax avoidance, which is different. Tax evasion is illegal, tax avoidance is legal.
Yeah.
As long as we are just using the framework that is actually in the Internal Revenue Code, you are safe to do those type of things.
Yeah. I don't look
Yeah.
good in an orange jumpsuit, so that's a good thing to be able to.
So I was reminded as Rachid was talking, I was reminded about that line in the movie, which is also I think in the book too, The Firm, the John Grisham book where Tom Cruise is the main
Yeah.
star, Gene
Hmm.
Hackman's in it. And I remember they're talking and Tom Cruise's character says to Gene Hackman's character, um, so you don't want the clients to get audited. And Gene Hackman responds, I don't care if they get audited. I don't want the IRS to win.
Ooh.
So that
Yeah.
that's
Yeah.
what
And
Rashid's comments reminded me of.
yes, and then when you talk about audit, it just remind me sometimes I do work with clients and they're like, oh, and then they get panicked. Oh, I'm getting audited. Oh, I am scared, or just, they're coming after me. I'm like, no, just sometimes audit doesn't mean that you did something wrong. It just means
Right.
that, you send them your taxes. They just want to make sure and verify some of the information. So an audit doesn't mean technically that it's wrong. It's just let's go ahead and just make sure we follow the process. We do the record keeping. We send them what they need. We just talk to them, making sure that you're a good citizen, you're doing the right thing, then you should be good. But now, if you did do something that was off the book, well, then it's definitely get tougher.
That'll get you into trouble. But
Yeah,
you're
that
you're
gets you
you
definitely
you're
in
making
trouble.
sure that they don't do, and that's the thing. People are
Yeah,
trusting you to make sure that you don't have to worry about those kind of things.
absolutely. Yeah,
You're working within the rules. You know the rules. You know the tax code. You just want to make sure, like, hey, it sounds weird, right? Like, what? I can do that, but it's like, yeah,
yeah.
you're
I mean,
working
and I
within. That
tell
makes
people
sense.
it's like the government, the U.S., Congress wants you to pay less taxes. People are like, no. So yeah, they want you to pay less taxes. So why? They made the law. It's in the Internal Revenue Code. It's there. So they actually encourage you to use those strategies to make sure that you pay less in taxes. But if you don't use them, that's your fault. It's not them.
Right.
So just use those strategies that the law actually, give you that entitlement. Do that, pay less taxes, build wealth. This is really how you will actually be financially free.
Love it.
Nice. Well, thank you, Rashid. We appreciate you being a guest on this week's show.
Okay.
I do want to remind everybody that you will increase my and George's tax obligation by giving to the Patreon page, patreon.com/crushing debt, or you'll help us pay our taxes. Who knows? But no, I'm kidding. Anything we get through the Patreon page goes back into the show. Um, and I think that is it. This show comes out the beginning of July, and so the fundraising for pancreatic cancer is officially over. If you are so inclined, you can still go to the the PanCan organization website and donate. But in another couple of months, we'll fire up that fundraiser again for the
Hmm.
2027 Pancreatic Cancer Walk. Other than that, I think we have reached the end of this week's episode.
Love it.
So, thank you again, Rashid, for being a guest on this week's show. We really appreciate all the information. Again, if you want to reach out to Rashid, it's R Barry, Barry, at rmjconsultant.us. I'll have the website, the contact
Yep.
information in the notes. Other than that, I think, George, we've reached the end.
I love it, and it's celebratory because it's we're talking taxes and Fourth of July, so you can't get more American than that, man. How you doing? Let's go.
Yeah.
Maybe apple pie, maybe.
That's it. The third, yeah, third. Okay, fine.
There you go. So anyway, I think that will do it for this week's show. Certainly, check out Rashid's website and his materials that will
Mhm.
help you have more money at the end of the month rather than month at the end of the money. And we will talk to you in next week's episode.
All right. Thank you, Sean.